Welcome to the New York State Association of School Business Officials webinar. Today's program is IRS Auditing and Expectations webinar. Your host for today is Donna Clement, Director of Professional Development, New York ASBO. Operator assistance is available at any time during this conference by pressing #. A question and answer session will follow the presentation. You may send chat questions during the presentation using the chat window indicated by a speech bubble icon located to the right of the presentation. Please address chat questions to the Q&A group using the drop-down list located at the bottom of the chat window. I will now turn the call over to our host, Donna. You may begin.
Thank you, Heather, and welcome everyone to our webinar on IRS Auditing and Expectations. And we are very pleased to have Diane Morris with us. And Diane has done this webinar a few times, but there's always good information that needs to be learned by so many people. So we're glad that all of you were able to attend and really encourage you to ask those questions that you have. And Diane has put some time in her presentation in a few spots for questions. So make sure you ask them and we will be glad to answer them. And Diane, it's all yours.
Thank you. Hello, everyone. As you were told, my name is Diane Morris. I've been with the IRS for about 34 years, working with employment taxes for about 18 years. I currently work only with government entities, including state agencies, counties, cities, towns, villages, and school districts. There's a lot of information that I'd like to present to you today, so why don't we get started? In this webinar, we're going to cover a lot of different topics, all related to government entities and tax law compliance. We're going to start with talking about the FSLG division of the IRS, which is the department that I work in. Then we'll talk about common areas of employment tax noncompliance that we found when working on compliance checks and examinations of government entities. We're going to look at 1099 miscellaneous forms, W-9s, backup withholding tax, Form 945s, the Ten Matching Program, accountable plans, auto expenses, and determining whether a worker is an employee or an independent contractor. To me, one of the most important things that I'm planning to do in this webinar is to provide you with a number of sources where you can find your own answers to your questions. Some of you may have questions as we go along, so what we're going to do is have 2 times during the webinar when we'll try to answer most of them. Our next slide shows FSLG. That's the division I work in. FSLG stands for Federal, State, and Local Governments. We only work with government entities, those listed on the screen. So what does FSLG do? Well, we provide a lot of education during the year. We speak at outreaches. We speak at seminars. We work on compliance checks of individual government entities, and we also work on exams. Now, a compliance check is not an exam. It can be done in person or by correspondence and telephone. A compliance check is a review conducted by the IRS to determine whether a government entity is following record-keeping and information reporting requirements. The whole purpose of it is to educate government entities about their reporting requirements. It gives us an opportunity to provide information to the entity on any area we see where there is a lack of understanding or knowledge. In a compliance check, information returns such as 941s, W-2s, 1099s, and 945s are reviewed. No financial books or records are examined, but there is an interview where we ask questions about 1099s, for example, and we provide educational information if necessary. Now, an examination is different. In an exam, we look at the books and records to determine whether the government entity correctly complied with tax laws, and we also make the tax corrections, if any, that need to be made. Now, we're going to start by talking about 1099 miscellaneous forms. And the reason I want to start with this area is because it is one of the most common areas where we find governmental entities making mistakes. So it's really important that we cover it in as much detail as possible. But we're going to start with basics as a review and work from there. What is a 1099 miscellaneous information return? Well, it's a form required to report payments for services or a combination of services and products. So what payments must be reported? Payments of $600 or more for the year, which are paid in the course of your trade or business, must be included on a 1099 miscellaneous form. There are specific boxes where certain types of payments need to be reported, like attorney fees and medical service payments. Gross proceeds to attorneys will be put in Box 14, attorney's fees in Box 7, and payments for medical or healthcare services we put in Box 6. Now, related to payments to attorneys, if you make payments of $600 or more to an attorney who's not on your payroll, you need to include that amount on a 1099 regardless of whether the attorney is a sole proprietor, a partnership, or a corporation. This is an exception to the rule that corporations normally don't receive a 1099. There are a good number of government entities that don't handle this correctly, and that's why I wanted to particularly mention it. So it's important to be aware of it. Another exception to the general rule related to corporations is medical and healthcare payments. You report these types of payments in Box 6 of the 1099 miscellaneous. You would need to report payments to all sole proprietors, partnerships, and corporations. So if you have a payment for medical services that you make to, for example, ABC Medical Services INC, for example, you would need to give that vendor a 1099 miscellaneous at the end of the year. A medical payment includes doctor fees, drug testing, physical therapy, for example. A payment to a pharmacy would not be included because that would be for a product and not a service. So a 1099 would not be required. Also, payments to government hospitals or tax-exempt hospitals would be exempt. Now, this next slide provides some general information about corporations. A corporation is a separate entity from its owner. And you know that generally payments for services paid to corporations don't require a 1099. However, you may have the instance where you have a contract with a corporation and the corporate owner asks you to make the check for payment out to him or her directly rather than to the corporate name. If you do that, you need to remember that you would be required to give that person a 1099 miscellaneous at the end of the year, made out to his or her name, if the amount was $600 or over. Also, if you're making payment to the individual rather than to the corporation, you would need to use their Social Security number, not the corporation's EIN. Never assume that an entity is incorporated. An LLC stands for a limited liability company, not a limited liability corporation. I've been out to many seminars, and I'll always ask that question, what do the letters LLC stand for? And very often the response I get will be limited liability corporation. And it's not correct. It's a company. An LP is a limited partnership, and an LLP is a limited liability partnership. There are a number of misconceptions about LLCs, so I thought this was a great opportunity to provide you with some helpful information about them. First, an LLC can have more than one owner. It can be taxed as either a sole proprietor, partnership, or a corporation. And you need to know how the LLC files so that you can determine whether or not you need to give them a 1099 at the end of the year. So it's important to know that just because an entity has the letters LLC at the end of their name, it doesn't mean that you don't need to give them a 1099. So what's the best way to find out how they file? Well, you would obtain a W-9 from the LLC to determine their status. It's important to remember to review the W-9 when you receive it back from the vendor to make sure it's properly filled out. Over the years, I've looked at countless W-9s that government entities have on file, and many of them are incomplete without even the filing status of the vendor being filled in. So when you do receive one back from a vendor, I would highly recommend that you take a look at it and make sure that it's a complete W-9. For LLCs, you report payments to them on a 1099 if they are a sole proprietor or a partnership, and of course to a corporation if they're an attorney or a medical service provider. It's important to track your vendor payments. Make sure you combine payments made from all of your departments when you determine who should receive a 1099. I included an example for you. Your school district has a separate general fund and a capital fund. Each of the funds pay I'm a vendor $400 for the year. No individual payment exceeds the $600 criteria for filing a 1099, but combined they are $800, so you need to file the 1099. Very often I will go out to an exam or a compliance check, and I'll find that not all the funds were picked up for purposes of determining who needs to get a 1099. Also, don't forget about petty cash. I know most school districts keep very small petty cash funds, so most of you won't have a problem with this. However, if you have repeated payments to someone for services paid out of your petty cash, it could exceed $600 for the year, and then again, you would have that liability for filing the 1099. I'd like to review some common errors related to 1099s. It's really important to obtain the vendor's identifying information on a W-9, as I had mentioned, preferably before making payment. If you don't, this can result in problems down the line. If you make reportable payments to a vendor of $600 or more, and they haven't given you their TIN, their taxpayer identification number, you are required to withhold backup withholding tax at the rate of 28% from your payment to them. We're going to talk about this in a little more detail later in the presentation. Several other common misconceptions include the following. Incorrectly assuming a payee is a corporation because the vendor's name includes the words company or associates, or because they give you an EIN instead of a Social Security number, or if the vendor gives you a DBA name instead of their own first and last names, and they're a sole proprietor. The fact that a DBA name may include the words company or associates doesn't mean it's a corporate entity, or that you don't have to file a 1099 for that entity. If the vendor gives you an EIN, they could still be a sole proprietor. Many sole proprietors have very professional-sounding names. Doesn't mean they're incorporated. You'd need to use the W-9 to get their information from them. It's not uncommon for me to go to a compliance check or an exam at a school district, and the only 1099s that I find are for vendors who have individual names, first and last names of the vendor. Vendors with DBA names can often be overlooked, as can vendors that are partnerships. Very often government entities overlook giving partnerships that provide services a 1099, and they would need to receive one. And down the line, this can result in penalties from not filing required 1099s. So it's really important to do a thorough search of your vendor list to see who needs to get a 1099 at the end of the year. In auditing government entities, we've found that they've included certain payments to employees on a 1099, which really should have been included in the employee's wages and put on their W-2 instead. For example, if you pay an expense allowance to an employee, you would need to include that amount in the employee's wages and withhold payroll taxes on it. It would be incorrect to put that amount on a 1099. An example would be a uniform allowance that you may pay to your employees, perhaps a set amount of $100 a year, and you don't request receipts in order to be paid the amount. This $100 payment needs to be added to the wages of those employees who receive it, with payroll taxes withheld. If you pay auto expense reimbursements to your employees without meeting the accountable plan requirements, that amount would be a taxable fringe benefit to the employees, and it would need to be included in their wages. We're going to talk about accountable plans in more detail later in the webinar. One of the most helpful forms that you can use to help yourself do your work related to vendors more efficiently is a W-9. It's a request for a taxpayer identification number and certification. Why is it important and why is it helpful to you? Because it provides you with the following information. It gives you the name of the vendor, their DBA, their filing status. It provides you with the vendor's Social Security number or EIN, and it has the vendor's signature certifying that the information on it is correct. One of the most important parts of that form is their filing status. Here are several important points to remember about a W-9. If the vendor is a sole proprietor, their first and last name should be on line 1. If the vendor only gives you their DBA name, you won't be able to fill out the 1099 correctly at the end of the year. You'll need their first and last names because for a sole proprietor, that's what would be put on line 1 of the 1099. If you put a sole proprietor's DBA name on the 1099 rather than their actual name, you'll get a mismatch report or a CP 2100 notice from the Service Center along with a possible penalty notice. And if the vendor is an LLC, you'll need to make sure that they check the box on the W-9 which tells you how they file. Just noting they're an LLC doesn't give you the answer. You'll need to have them check the box that will tell you how they file. I frequently see W-9s with LLC listed, but no box checked as to how they file. So the personnel trying to determine the correct filing for purposes of a 1099 won't have the information that they need to do their job correctly. So this is just a heads up for you to make sure that that W-9 is completely prepared. I've included a question related to vendor payments in the webinar to help. Let's look at it. Your school district hired a vendor to paint the interior of the high school over the summer. The vendor's name is a painting company, LLC. What steps should your office take to get the necessary information from the vendor to determine whether you need to provide them with a W-9? Now, that's a very common question. And these are the steps that you would need to follow. First of all, you would give the vendor a W-9 to complete at the time you contract with them to do the job. You need to make sure the vendor completes the form and indicates on it how they file, either as a sole proprietor, partnership, or corporation. If the W-9 is not complete when it's returned to you, call them, tell them what needs to be added, and have them either mail or fax the completed form back to you. If it's a sole proprietor, ensure that you have the first and last name of the vendor on the W-9. Again, sometimes the vendor will only provide that information in the form of their signature, and that's not a good way to get the information. Many signatures are illegible, and when it comes time for the 1099 filing, you may not spell it correctly, and then you'll end up with a CP 2100 notice and a possible penalty. So I would make sure that their first and last name are on that W-9. There's a really good publication that provides additional information on this. It's Pub 1281. If it was me, I would download a copy of it from the website. It's an excellent publication. I'll be mentioning this publication again later in the webinar because it also has a lot of detail in it about backup withholding tax as well. Donna, we are ready for our first question and answer time. Donna, are you on the phone?
I'm not sure where Donna is, but if you'd like, Dan, I can go ahead and give everyone the instructions one more time for the question and answer session.
That would be great.
Okay. Participants, if you'd like to ask a question, please press 7# on your phone now, and you will be placed in the queue in the order received. Please listen for your name or location to be announced and be prepared to ask your questions when prompted. Conversely, you can also address questions in the chat window using the chat bubble icon located in the right-hand corner of your presentation screen, and you can just type your questions in there. We are now ready to begin.
Okay. Heather, I don't see any questions in the chat box.
And I do not have any questions on the audio portion either, although I did just receive a message from Donna that she was disconnected on the phone, so she should be back shortly.
Okay, great. That's good. All right. So I guess I can take it from that, Heather, that we don't have any questions at this point?
Yeah, if there's no further questions,
Okay.
I guess. Oh, wait, actually, I do. I have one here from Charlene Ecoli. Hang on one second.
Sure.
Hello?
Hello, Charlene.
Yes.
Okay, you may ask your question.
Hi, Charlene.
I have a question regarding tax certiorari's that are paid to attorneys. Do they receive a 1099?
Okay, tell me again. Explain that, exactly what it is. I'm not familiar with the term, to be honest with you.
Tax certiorari is when a person is or company is requesting a refund of their taxes and overpayment of taxes. And it usually goes to their attorney.
Mm-hmm. And there's no service rendered.
Whatever, and will then get given to the petitioner.
Right. As long as there is no service rendered. Remember, 1099s are for, or 1099 miscellaneous would be for when there is a service rendered by an attorney. And if all this is a refund of taxes, there's no service rendered.
Okay, thank you.
Sure, no problem. Any other questions, Heather?
None verbally, but it looks like
we
have one in the chat window.
Okay, let's see what we can find. Do we have to provide 1099 to retired staff for their Medicare reimbursements that are over $600 per calendar year? That is an excellent question, and it's a very common question that I receive. Okay. Related to that question, Medicare reimbursements, as long as the retirees provide the verification that they're covered under Medicare, and they show you via a receipt or some type of verification that they indeed are covered under Medicare Part B, I'm thinking that's what you mean, then, and you reimburse them dollar for dollar the amount that is their expense, there's no problem. The problem is incurred when the school district pays a set amount to a retiree whether or not they have the Medicare Part B. And I have seen that happen. I've seen where there's a blanket amount given to all retirees paid monthly, whether or not they have Medicare Part B. That's taxable. That's taxable to the retirees, and it is not taxable on a 1099. That is taxable on a W-2 with payroll taxes withheld. I hope that answers your question.
Okay, thank you. I had a disconnect on the phone. Sorry about that. We have a question here from Mary Ellen, and she says, you must issue a 1099 to law firms for tax certiorari's?
Perhaps she's commenting on the previous question that we had.
Mm-hmm.
That could be it. Again, I'm not familiar with that term. I've never run across it.
A tax certiorari?
Mm-hmm. And what I had mentioned is that if you are just reimbursing real estate taxes to an individual, there's no need for a 1099 miscellaneous form. But perhaps there's additional information that I don't have related to this.
Yeah, because it would be the law firms, I think that it would, well, I'm sure someone can explain to us about the tax certiorari so that Diane can give us a complete,
I haven't seen it.
Yeah, a complete answer. Okay. All right. Anything else about 1099s? I know earlier, Diane, when we were talking, you said there's just so many issues that come up.
Mm-hmm.
What's the most common?
Well, they're really the ones that I mentioned so far. Incorrectly prepared 1099s with governmental entities being assessed penalties that can so easily be avoided when the 1099s are prepared correctly. And that's just a matter of the entities obtaining correct information on the W-9. So it's really in the school district's best interest to have those on file and to ensure that the 1099s are put in the name of the first and last name of the vendor when it's a sole proprietor, and to make sure that even if it's a professional-sounding name, it can still be a sole proprietor. Very often I'll go to school districts, and they'll only have 1099s to individuals. There won't be any to partnerships, and there won't be any to the law firms that are incorporated, and there won't be any to a medical service provider that may have been paid by the school district. And so this is just really a heads up for any school district that may be listening that has run across this.
Okay. Well, thank you. And
all right.
I'll try and keep my connection open, and we can continue.
All right. So why don't we...
Kristen Alexander has a question here. If you have a vendor that you use frequently, how often do you need to request an updated W-9?
Excellent question. As long as you have a W-9 on file, you should be fine. The only time when you may want to request an updated W-9 is if you know there's been a status change related to the vendor. And the bottom line is normally you may not get a heads up about that. So the updated W-9 may be requested if, for example, you file your 1099s at the end of the year and you receive a CP-2100 notice from the IRS with that vendor listed as a mismatch. At that point, you would probably want to get an updated W-9 for your records just to make sure that nothing changed in the status of the vendor. And you may also want to check your records at that point just to make sure that there has not been a transposition of numbers in the EIN or Social Security number of the vendor. I have seen that happen. So, again, to reiterate, Kristen, basically it's just a matter of getting that on file, and you can keep that for a longer period of time. You don't have to request a new one every year or every 2 years at all. It's just a matter of getting that initial information and updating it if you find out there's something incorrect on the CP-2100 notice. So hopefully that answers your question.
Okay, thank you. So we're ready to move on to the next
Yes, we
topic.
are.
Okay.
Definitely. Okay, the next topic is the IRS Ten Matching Program. The IRS has an online TIN matching program. It's a tool for payers to verify the accuracy of the name TIN information that you have before you submit your information returns to the IRS. If you haven't used it yet, there's an online tutorial at the program's webpage to teach you how to utilize it. The matching program is available to payers of reportable payments, including interest, dividends, and non-employee compensation. It allows you to verify payee TINs before filing your 1099s. The system allows the user to input the TIN name combination and then matches your combination against master files. The IRS will inform you if the name TIN combo matches the database. You can obtain more information at the IRS website under e-services or call 1-866-255-0654. There are some really good reasons to use the TIN matching program. It helps you avoid TIN errors. It reduces backup withholding tax notices. It helps you meet reasonable cause to avoid penalties. And the bottom line is that it can help you save time and money. The next topic we're going to cover is backup withholding. And the question is, are you required to backup withhold? Well, if you make reportable payments to persons who have not furnished you their valid TIN, backup withholding becomes an issue. You would need to withhold at the 28% backup withholding rate that I previously mentioned. When to begin backup withholding? The general rule is for vendors who haven't given you a TIN, backup withholding begins when aggregate payments for the calendar year to that vendor equal or exceed $600. However, if you're continuing to make payments to that vendor in the next calendar year and they still haven't given you their TIN, backup withholding tax starts with the first dollar paid to them that next year. And that's important to remember. How do you report the amount of backup withholding tax? Well, you report it to the payee and to the IRS in Box 4 of the 1099 Miscellaneous. This applies even though the amount of the payment may be below the normal threshold for filing the Form 1099. Remember, I'd explained that if you continue to make payments to a vendor in the next calendar year and they still haven't given you their TIN, you need to take out the 28% backup withholding tax from the first dollar paid to them in that year. So in that subsequent year, if your gross payment due to the vendor is $400, for example, you would have the 28% backup withholding tax of $112, and you would pay the vendor $288. You would need to file a 1099 for that vendor, even though the payment was under $600 because of the backup withholding tax. So the next question becomes, how do you report the backup withholding tax you withhold from your vendors? The answer is that you report it on a Form 945. A 945 is an annual return due January 31st of the following year. Ordinary deposit rules apply. You can get more information about this in the 945 instructions and Pub 15. You'd make your Form 945 deposits separate from your Form 941 deposits, and you would not include your backup withholding amounts in with your 941 payments. This could definitely cause a problem down the line, so it all has to be separate. Where can you get additional information related to W-9s and backup withholding tax? There are several places. The W-9 instructions are an excellent source. The 1099 general instructions as well. Pub 1281 that I told you about before is an excellent source of information. There are several pages that are written in question and answer format, and they are well written. Also, Form 945 instructions, and you can obtain copies of all of this information at the IRS website. I might even print a copy of Pub 1281 just to keep it for your records, because there's a good deal of information on it, reiterating a lot of what we just talked about. Our next topic is fringe benefits. We're going to talk about what a fringe benefit is, how to tax it if necessary, and what publications you can refer to that will provide you with the additional information that you need. A fringe benefit is a form of pay for the performance of services. It can be in the form of property, services, cash, or cash equivalent. All fringe benefits are taxable and must be included in the recipient's pay unless there is a law that specifically includes it. So what are the steps to take related to determining whether you're correctly handling a fringe benefit? First, you need to identify the specific benefits provided to your employees. You then need to determine if the benefit is excluded from taxability by law or if it's taxable. I wanted to provide you with a number of sources of information related to fringe benefits. The Taxable Fringe Benefits Guide is the most comprehensive source of information with detail related to many fringe benefits. Pub 15B, the Quick Reference Guide for public employers, and Pub 963 also are very good sources of information. In the Quick Reference Guide, there is a helpful chart with numerous non-cash fringe benefits listed, and it provides information as to whether or not each of them are taxable for federal income tax withholding and Social Security and Medicare withholding. You can also find in the Quick Reference Guide a sample listing of the types of payments that would go in boxes 1, 6, and 7 of your 1099 forms. So it really has a lot of helpful information in it. You can get all these publications at the IRS website. For those of you not familiar with the Taxable Fringe Benefits Guide, I wanted to show you how to find it at the website. Once you get to irs.gov, there's a tab titled Government Entities. After you get there, you'll see tax information for federal, state, and local governments. You click on that. On the left side of the screen, you'll see Educational Products. Click on that, and it'll take you to the Taxable Fringe Benefits Guide. The reason I wanted to give you the directions on how to get there is because throughout the year, I will get calls from people who are employees at government entities who've heard me speak at a seminar, and I did not give the directions on how to get to the educational products, and they don't know how to get there. So they'll call or email me subsequently. So I thought I would give you the information at this point so that you'd be able to familiarize yourself with the contents of that publication. Also found under Educational Products online, that's where you'll also find the Quick Reference Guide for public employers. And you'll also find Pub 963 there. Pub 963 is a joint publication between the IRS and the Social Security Administration. It has a great deal of information on fringe benefits. It has a great deal of information. Chapter 4 of it only deals with employee or independent contractor issues. There is a lot of information on Social Security, pensions, and many, many other areas. It is very, very helpful. Now, if you determine that a certain fringe benefit is taxable, it needs to be included in the employee's wages and on their W-2. You would never put an employee's fringe benefit on a 1099. We're going to talk about what comprises an accountable plan. When an employee is reimbursed for a legitimate business expense, that reimbursement must be part of an accountable plan for it to be non-taxable to the employee. A plan under which an employee is reimbursed for expenses is an accountable plan only if, number one, the expense is in connection with the performance of the employee's work. It must be for an expense the employee could deduct on his or her tax return. Number two, there needs to be an adequate accounting by the recipient. They need to verify dates, place, amount, and business purpose of the expense, usually on a voucher or business report or expense report. Number three, the employee must return to the employer any advance amounts they receive from the employer in a reasonable amount of time. What is a non-accountable plan? It's an allowance or reimbursement program that does not meet all three of those requirements we just talked about for an accountable plan. Amounts paid under a non-accountable plan are income to the employee and must be included in wages with payroll taxes withheld. Details related to withholding, per diem, travel advances, accountable and non-accountable plans are all found in the Taxable Fringe Benefits Guide that I told you about. Okay, the next slide that we're going to be talking about deals with expense allowances. What's an expense allowance? An expense allowance is an amount given to an employee without accountability. It's taxable wages to the employee. For example, $300 per month given to an employee for business usage of their personal vehicle. That would be a taxable fringe benefit and needs to be added to their wages. It doesn't matter whether the amount is for mileage or any other business expense. I've included a couple of expense allowance examples for you. Let's look at our first example. A school district assistant superintendent is provided with a $400 per month allowance for his business expenses, including the business usage of his personal automobile. It's not part of an accountable plan. Is this a non-taxable fringe benefit? The answer is no. The $4,800, $400 per month times 12 months, must be added to his wages with payroll taxes withheld. Let's look at another example. A high school principal is given $300 per month so that he can purchase life insurance for himself. Is this a non-taxable fringe benefit? The answer is no. The $3,600, $300 a month times 12 months, must be added to his wages with payroll taxes withheld. The only exclusion for life insurance is group term coverage with very specific requirements to qualify. If you would like additional information related to group term life insurance, the publications that I had mentioned in the previous slide would give you that information that you need. Pub 15B has information on it, and the Taxable Fringe Benefits Guide also has information on it as well. Here's another example. This is an example of employees receiving cash in lieu of an allowable non-taxable benefit. Okay. Pursuant to a negotiated agreement, employees of a school district who opt out of the school's health insurance plan receive $2,500 for the year. Is this a non-taxable fringe benefit? No, this cash must be added to the employee's wages with payroll taxes withheld. Now, next I wanted to provide you with some information about your employees using their personal vehicles for business. I'm giving you both the 2009 rates and the 2010 rates. The 2009 federal mileage rate was 55 cents a mile. For 2010, the rate is 50 cents a mile. Currently, if you reimburse your employees at the 50 cent per mile rate or less, it's non-taxable to them. If you reimburse them an amount over this rate, the excess amount is taxable to the employee. If the employee chooses not to get reimbursed, they can't claim the mileage expense on their personal tax return as a business expense. That's just an FYI for you. Remember that your reimbursement must be a part of an accountable plan that we talked about earlier. Now, related to employer-provided automobiles, the general rule is that separate records of business and personal mileage must be kept by the employee. If the records are provided by the employee to the employer, only the personal usage is taxable to the employee. If the records are not provided by the employee, then 100% of the use of the vehicle is taxable to them. The employee can then deduct any business use on their Form 1040. All of the valuation rules that we're going to be talking about in this webinar are discussed in detail in the Taxable Fringe Benefits Guide for your information. Now, we just talked about the general rule, but there are three different special auto valuation rules: the lease valuation rule, the cents per mile rule, and the commuting rule. And we're going to talk about all three of them. In the lease valuation rule, the employee's personal use of the auto needs to be computed as a percentage of total use. So the employee needs to keep records of all of their business and personal use of that vehicle that's provided to them by the school district. You need to keep in mind that all commuting miles between the employee's home and the school office where they work is personal mileage. After the personal use percentage is determined, you need to determine the vehicle's fair market value on the first day the auto is made available to the employee. Using the annual lease value found on a chart in Publication 15B, You multiply the annual lease value by the percentage of personal use you computed. If you provide fuel for the vehicle, you would add in 5.5 cents per mile times the number of personal miles. That total would be added to the employee's wages with payroll taxes withheld. And I want to give you an example related to this. Here's an example using the lease valuation rule. The superintendent of XYZ school district is assigned an auto provided by the district. He or she drives the car 20,000 miles for the calendar year, of which 4,000 miles were personal miles. This is 20% personal use. The fair market value of the car on the first day it was made available to him or her was $14,500. And that gives you an annual lease value of $4,100. Remember, the annual lease value is found in Publication 15B. Personal use is valued at $820, which is the $4,100 annual lease value times 20% personal use, plus $220, which is the 5.5 cents per mile times the 4,000 personal miles driven by the employee for fuel costs. The total to be included in the superintendent's wages is $1,040, comprised of the $820 and the $220. The cents per mile rule is next. To use this rule, the vehicle cannot have a greater fair market value in the year placed in service than a maximum amount determined. For 2009, it was $15,000 for cars. For 2010, the maximum vehicle value is $15,300. The auto must be used regularly for business. At least 50% of annual mileage needs to be for school business. The vehicle must be driven at least 10,000 miles for the year by the employee. And if fuel is not provided, the standard mileage rate can be reduced by up to 5.5 cents per mile. For 2009, the standard mileage rate was 55 cents. If no fuel was provided for 2009, the cents per mile rule would be 49.5 cents, which is the 55 cent rate minus the 5.5 cents per mile. For 2010, this rule would use 44.5 cents, which is the 50 cent rate for 2010 minus the 5.5 cents per mile. The commuting rule is the last special valuation rule, and it's a very common rule to use. The commuting rule can be used for a vehicle that is owned or leased by a government entity. It has to be provided to the employee for business use. The employer must require the employee to commute in the vehicle for a valid, non-compensatory business purpose. It can't just be a way to give the employee additional compensation. The employer must have a written policy prohibiting personal use other than commuting. The employee can't use the vehicle for other than de minimis personal use. If these criteria are met, the taxable benefit is $1.50 each way for every day worked. I've included an example of the commuting rule for you. A government entity transportation department employee who is on call 24 hours a day to respond to road emergencies is required by his employer to commute in a vehicle outfitted with communications equipment the employee would need if called out at night. In 2009, he worked 220 days. 220 times $3, which would be $1.50 each way, equals $660. This is the amount that would be needed to be added to the employee's wages. Now, for government entities, the commuting rule cannot be used for control employees. A control employee for a government entity is an elected official or an employee with compensation over a specified amount. For 2009, it was $143,500, and for 2010, it's $145,700. Control employees must account for their personal versus business mileage and use the general valuation rule or lease valuation rule. In other words, there has to be an accounting of personal and business miles. Here's an example of a control employee. A school superintendent is provided with a vehicle pursuant to his employment agreement with the school district. The school district imputes the taxable portion of this fringe benefit using the commuting rule. His salary for the year is $165,000. Is the school district using the correct rule to value this taxable fringe benefit? The answer is no. The superintendent is a control employee, and the employer cannot use this rule to value the benefit as his or her salary exceeds $145,700 in the 2010 year. Our next topic is how to determine whether a worker is an independent contractor or an employee. And there is a lot of misconceptions out there about this area, so I wanted to cover it. Also, in an examination or a compliance check, this is one of the areas that we always cover, and frequently we find errors in this area. So I wanted to make sure I would be able to give you some information related to determining whether or not a worker is an independent contractor or an employee. In this slide, we learned that there's 3 categories of evidence to consider in determining whether a worker is an employee or an independent contractor. The first one is behavioral control. Does the business have the right to direct how, when, and where to do the work done by the worker? Does the business provide supplies or equipment to the worker? Is the worker required to follow established routines and policies? Financial control. Who controls the financial aspects of the job? Does the worker have a significant investment related to their business? Does the worker have overhead expenses? For example, does the worker rent their own office for their business? Do they hire their own clerical workers or assistants? Does the worker have an opportunity for profit or loss? That's an important question. And is the worker's services available to the general public? Relationship with parties. Does the worker receive employment benefits from the company? Is there a written contract between the company and the worker? You need to look at the contract to determine what clauses it contains related to behavioral and financial control. Are the worker's activities integrated into the operations of the business? Or is it, for example, like the hiring of a painter to paint a building, where the worker's painting activities have nothing to do with the operations of the business? No one factor is determinative. You need to look at all of the factors related to the position to determine the correct classification. An important factor to keep in mind, though, is does the worker have an opportunity for profit or loss from the activity? Let's look at some indicators of independent contractor status. Number 1, workers are not required to follow specific methods or instructions for completing their work. The worker makes their own schedule. The worker furnishes their own supplies and equipment to perform the work. The worker can hire their own assistants to complete the job, with the worker paying the assistants. The business relationship is often short-term. The worker can have an investment into a facility with overhead expenses that they are responsible for. The workers have an opportunity for profit or loss. Now, let's look at some of the indicators of employee status. First of all, the worker is required to follow specific methods or instructions for completing their work. The worker is required to work a set amount of hours and or days each week. The employer supplies the office, the equipment, and the tools needed to complete the work. The worker can receive training from the employer for completing assignments. The work assigned is part of the operations of the business. The business relationship is often longer term. The worker does not handle their own sales receipts. The worker can receive fringe benefits from the business. The worker has no risk of loss from the business. Now, the right to direct and control is an important aspect. It's an important part of the aspects of an employer-employee relationship. Employment tax regulations provide that an employer-employee relationship exists when the business for which the services are performed has the right to direct and control the manner in which the services are performed. It's not necessary for the government entity to actually direct or control. They only need the right to do so. Actually, the nature of a worker's occupation very often affects the degree of direction. For example, a physician on staff would require less supervision as related to his duties. His work is just so specialized, and he's expected to know what he's doing. Now, there are a number of common misconceptions related to employees. Employees can be part-time workers. They can be temporary workers. Employees can be probationary period workers. Employees can be workers who say they are independent contractors. You may have a contract between a government entity, between your school district and a worker, stating that the worker is to be treated as an independent contractor. You still need to review all of the factors in the relationship between the government entity and the worker. That statement in and of itself in the contract alone is not the controlling factor. You need to look at all the factors in that work relationship. So, what do you do when you have the situation where you're trying to determine whether a worker is an employee or an independent contractor? First, you need to apply each element in the categories of evidence to the facts and circumstances surrounding the relationship. Remember, we talked about behavioral control, financial control, and relationship of the parties. You need to evaluate the relative impact of each element, and you need to determine then if, based on all of this, if autonomy or control predominates, remembering that the business only needs the right to direct and control. It doesn't need to actually do it, in fact. Now, Publication 963, Chapter 4, has very detailed information specifically written for government entities related to this area. It can be very helpful to you. And if you're still not sure of the correct answer, you can submit. Now, my screen has not turned. There it is. Okay. If you're still not sure of the correct answer, you can submit an SS8. It's a form where you would write in all of the specific information related to the work that that individual does for your governmental entity. And what will happen is that you will get a letter back with a detailed answer, including cited tax law, as to how the worker should be identified. It can be very helpful if you are in doubt. Now, I wanted to include in the webinar several additional helpful sources of information that are found at the IRS website. And Donna, I wanted to ask you, I have a gray screen on my laptop. It hasn't gone to the next frame. What do you have on yours?
I have a blue screen, and it says Fact Sheets Online.
Okay.
Did it
I have
turn
a gray
yet?
screen.
Okay,
No.
Heather?
Well,
I can see the FSLG fact sheets online. Is that the slide that we're supposed to be on?
We're supposed to be on slide 64.
Okay, it's 65.
Okay. I only have a gray screen. My screen doesn't show anything at all.
Okay, I'm going to go ahead and take back control then and take a look at the slides and make sure
Thank
we're
you.
on the correct slide. Yeah.
Thank you.
It's taking just a moment here.
Okay, my screen now shows slide 66.
Okay, let's see. we want additional sources of information. Is that correct?
Right. We want to go to slide 64.
Okay,
right.
And that says additional sources
right.
of information.
Exactly.
Okay, there we go.
Okay, my screen still shows 66.
Hmm.
Do you want me to switch it manually at my end, Heather?
It sounds like your computer has sort of frozen up because, Donna, can you see slide 64?
Yes.
You
Okay.
can. Okay.
Yeah.
Well, you know what? Let me do this without the slides.
Mhm.
Okay? That'll be the easiest way for us to do that. So going back to slide 64, I wanted to include in the webinar several additional helpful sources of information so that when you are in your office alone, you'll be able to find the answers that you need in the publications that are at the IRS website. Okay, and my screen is now showing slide 64. So Heather, if you...
Good.
Okay. I don't know.
Great.
I haven't got the controls. I don't know if Heather, if you wanted to give them to me or not.
Would you like them back? Are we going to try that one more time?
Well, you know what? I'll let you stay at the controls because I know what's on every frame, so that'll be fine. So we're going to go to slide 65 now.
Okay.
Now, also, on the federal, state, and local government page that we talked about before, you can click on FSLG fact sheets. These pages contain detailed information on specific fringe benefits, information return reporting, backup withholding, and a multitude of other topics. And they are well written, and they're also written in layman's terms, which makes it very easy to use for reference. Slide 66, FSLG facts. These pages, also found at the IRS website, provide information as well as question and answer scenarios related to many areas, including fringe benefits, Medicare, rehired annuitants, retirement plan issues, schools and teachers, 1099s. What is so good about FSLG facts is that they give you examples. There are real-life examples in every one of these areas, and they give you answers to those specific questions that are raised in the examples. Slide 67. The next thing I wanted to talk about that's found in slide 67 is the FSLG newsletter. And this is also found at the federal, state, and local government page. It's on the left side of the screen. And you would just click on FSLG newsletter. And what it is a semi-annual publication in electronic format. It provides information for all types of government entities on current developments. And it has in-depth articles in it that provide you with the detail that you need to understand the areas being covered. You can sign up online to have the newsletter sent to you via email if you'd like. Now, slide 68 shows us that there is a topical index online for the newsletter. You can click on any item in the index, and what will happen is that it'll take you to that issue that had the article in it with the educational material you need. So if you're looking for an article on a specific fringe benefit, for example, and you find that in the index, if you click on it, it'll take you back to the article, to the newsletter with that article in it. There are a lot of past articles on fringe benefits, deposit rules, emergency workers, excise tax issues, home care services, retirement plans, student issues, bonds, and many other areas. Now, slide 69. In that same place where you'll find all of these other sources of information at the IRS website, you'll also see something called the FSLG Toolkit. What it does is it contains links to many useful publications and tax-related forms that you as a school district may need during the course of the year. Now, at this point, I can take questions. Donna, did you want to monitor this?
Yes, and if anyone would like to call in a question, you dial 7# on your phone, and you'll be put into a queue, and Heather will let us know when there is a call. Otherwise, you can send your chat questions in now. And while we're waiting for some questions, I think these resources are just excellent and really nice to have, because sometimes you're not necessarily dealing with these issues on a daily basis, and all of a sudden when something comes up, you try and figure out what's the best way to go. Now, when you said there was Form SS8,
Yes.
where do you find that on
That's
the
at
web?
the IRS website. You would just go under Forms, and you would just type in SS8, and you would be able to print it out right from there.
Okay, so the just on the main homepage,
Mhm.
and it would say Forms. Okay.
SS-8, yes.
Right.
One thing I wanted to mention related to the Taxable Fringe Benefits Guide is that I always recommend that you either print out the whole publication, even though I know it's lengthy, or at the very least, you print out the detailed index at the back of that publication, and then if you download a copy of the pub onto your computer, you can always refer to it, but at least you'll have that detailed index to work from to find out the specific pages that you need in the publication.
Well, that's a good suggestion, because we do get into the habit of just printing so much, and we're killing so many trees. So having the detailed index plus downloading the publication can be very helpful.
Well, really it depends upon which way you work. Some people like to work with paper, and some people like to keep as much as they can on their computer.
Yeah.
So either way, it's an excellent publication. And there's a new one that comes out January of each year. In addition, there's a new Pub 963 that comes out in January of each year, as well as a Pub 15B. All of the publications are updated every year so that they incorporate the latest law and incorporate any changes to it.
When does the mileage rate come out? Is that January?
The beginning of every year. There's a revenue procedure that comes out at the beginning of every year with a new mileage rate.
Now, I know there have been a few years, because of the various difficulties we've gotten in with either oil prices rising and so on, that the rate has changed. How are people notified of that?
Well, basically it would come out in a revenue procedure, and then it would be at the IRS website, because that would pertain to every business around the country, not only government entities. So that would be found at, if you go to the IRS website, it should be one of the notices of any change. They'll let you know ahead of time. And it should be right there listed for informational purposes, because it applies to so many companies around the country.
And if you had, subscribed to the FSLG newsletter, which is available from email, I'm sure it would be in that.
Definitely would be in that. And the articles that are in that publication are very detailed. Very often an article would be several pages long, just detailing everything that you would need to know to handle a certain area correctly. And they also are written in layman's terms, so they're very easy to understand.
We
need that. Wonderful.
Our first question comes from Charlene Acoli with Valhalla School District.
Hi, how are you?
Fine, how are you?
Alrighty, I'm going back to the fringe benefits, the taxable fringe benefits.
I'm sorry, I'm having trouble hearing you. What was the question?
I'm going back to the topic of taxable fringe benefits.
Okay, fine.
Alrighty, if our administrators are under contract for expense reimbursements for car allowance, because they are administrators and they're under the executive, salary of over $143,000, that would not be taxable?
You say that they are receiving an expense reimbursement, which is really more of a car allowance, a set amount per month. Is that correct?
Yes.
Okay, that is a taxable fringe benefit. An expense allowance is a taxable fringe benefit to any worker, no matter what their salary. In other words, if a person who makes $20,000 a year wages receives a $200 per month car allowance, that is an additional compensation to them, must be added to their W-2 with payroll taxes withheld. If a person making $150,000 receives that same car allowance, taxable wages to them.
Okay, thank you.
Sure.
Okay, so even though those district administrators have a contract and it says what their wages are, and then here's the benefits, those benefits still need to be taxed as part of their wages.
Yes.
Okay.
Yes.
Thank you.
That was a very, very good question.
Thank you.
We have a question here from Jennifer, and she says, what can trigger an IRS audit?
Actually, there are several things that can trigger it. One of them, which is a very, very common trigger, but it doesn't mean, just because this happens to your government entity, doesn't mean you'll be automatically selected. But it is one of the items that can trigger an audit. And what it is if you give a W-2 and a 1099 to your employees. And again, very often, it can be an expense allowance perhaps given to the employee that may incorrectly be reported on the 1099 rather than being added to a W-2. That is what I find most frequently. Under certain circumstances, for example, if the person is an employee, maybe a teacher for your school, and they may have a side business totally unrelated to teaching, and you perhaps hire them for their services in their side business. And it would be, let me give you an example. Perhaps they have a business where they make signs, okay? And you hire them to manufacture a sign for the school district, and or paint a sign for the school district, and they charge you $700 for that. Now, this is from their business, totally unrelated to their position as perhaps a mathematics teacher at the school. Then you can give that individual a W-2 and a 1099. But most commonly what we find is that the amounts that are put on a 1099 for school district employees are amounts that should have been in the W-2. They're additional sources of compensation to the worker, perhaps not for the exact position that they occupy that's put on their W-2, but school-related work that they do that should be put on the W-2. That is the most common. Another trigger for an examination or a compliance check would be if you have a governmental entity that where we find that over the course of 2 or 3 years where there is a material decrease in the number of W-2s that are filed for the government entity, that can be a trigger, because what we found is that sometimes to save money, a government entity may change the status of a number of their workers from employee status to independent contractor status, and I've run across that. And that would be one of the reasons for these material decline in the number of W-2s, and that's why that could be a trigger for an exam or a compliance check. Those really are the two primary ones. Another one that is not as frequent but could be a trigger is if you have a government entity that is a larger government entity with a high payroll, and that government entity only files a very small amount of 1099s. What we found normally is that the larger the entity, the more 1099s that are filed, because there's more business dealings. It's a larger entity. And so as a trigger for an exam or a compliance check, the fact that you have an entity with a high payroll and only a small number of 1099s could be the trigger for an audit or a compliance check. I hope that answers the question.
Okay, thank you. Now we have, because of the economy and the way it is, and all the school districts are putting together budgets with possibility of layoffs. Does that mean because there'll be the layoffs with there'll be fewer W-2s?
Well, we're talking actually a large amount.
Okay.
Perhaps a quarter or a third of the employees, a large amount of payroll.
Okay.
And I would hope that would not happen to anybody.
Yes, all of us are feeling that. We do have a question here from Jean Miller. She says, has the mileage rate for 210 been reduced to 0.485 cents from 50 cents?
No, for 2010, it currently is at 50 cents.
Okay. So that's good to know.
Mm-hmm.
Yeah, and interesting how so many misconceptions get into the workplace and all over. So these newsletters, particularly I think that email newsletter would probably be a good thing for all the business offices to have, and certainly be up on all the federal laws.
Absolutely. What I found very often is that the manner in handling 1099s or W-9s or fringe benefit areas very often becomes a tradition of just being handed down from one employee, and they retire and teach the person that fills the spot after them how they handled everything. And it becomes a tradition of just handling it incorrectly year after year. And that's the most common response that I have gotten over the years as to why a government entity is continuing to do something incorrectly. They just really never learned the right way to do it. So that's why, for me, the outreaches, the seminars, and these webinars are so really important.
Well, thank you. We certainly are glad to have you. Any other points that you're finding, any changes that you're finding over these years? 34 years, that's a long time.
Yes,
with one group.
It is.
Mm-hmm.
Actually, to be honest with you, I think the 1099 area has improved to a certain extent. I would hope it's because of all the outreaches and seminars that are being done around the country.
Mm-hmm.
I would hope so. And all of the publications we're telling everyone about. But no, nothing else other than that. I really tried to cover in this seminar that the areas that we find the most incorrect information on. And those have pretty much stayed the same over the years.
Oh, isn't that interesting?
Mm-hmm.
Well, I think the handout or the presentation certainly details the information that is needed by all those who are listening, and can also use this to pass on to others who will be doing this work, so that those, like you're saying, those incorrect procedures can certainly be corrected. And
absolutely.
Yeah, the more all of the paperwork can be submitted correctly on both ends is a real good use of time.
Right. Now, I have an important phone number that I want to give out. It's a phone number that that you can call related to any questions you have about W-2s or 1099s. It's the Information Reporting Program toll-free number.
Okay.
And it's 866-455-7438. And those are specifically W-2 and 1099 questions. Oh,
well, that's good to know, too.
Mm-hmm.
So W-2 and 1099s. And we'll repeat that, 866-455-7438. So definitely a good phone number to have and good information to have. And I know, Diane, we have people from the western part of the state who are listening today, and that's the territory that you're in. Are there other offices or people available in other parts of New York State if someone wanted to have a live presentation?
Yes, there are. We have employees in Albany, and we have someone in New York City. But we actually, all of us, cover a good part of the Northeast.
Oh, okay.
I have exams in other states. So we do, our territory overlaps, but normally for seminars and outreaches, we cover the area that are near our offices. But for exams and compliance checks, we really share the northeastern part of the country.
Oh, wow. Okay. Well, thank you very much. There doesn't seem to be any other questions, and thank you all for joining us today. We do have the best practices for purchasing coming up on the 24th, and look forward to you joining us then. And then our next webinar, it seems to me, isn't until April 28, when we're going to talk about treasurer's reports. We do have some Accounting 2 workshops throughout the state, so if you haven't signed up for those, we welcome you to do that. And otherwise, thank you to everyone. Thank you to Diane. And Heather, we're ready to close out our program.
Great. This concludes today's webinar. Thank you for attending.
The moderator has ended the conference. Goodbye. Thank you for calling.